Hello everyone, I'm Novalui, Head of Investors Advisory at RHB Bank. Thank you for joining us for our Q2 2024 Fund Discoveries idea. We see broadening out in the equity market rally, which developed markets such as Japan and Europe have outperformed the US equity market, while even the broader S&P 500 index outperformed Nasdaq. Some light at the end of the tunnel, where emerging market index such as Taiwan almost make it to the top in the list. All these are evidence of broadening in the equity market rally. The quarter saw a contrasting scenario in Hong Kong equity, where blue chip stocks experienced a decline. However, both Hang Seng China Enterprise and Shanghai A share indices ended the quarter in a slight positive tone. The lackluster performance is attributed by the absence of significant stimulus measure from Chinese government and concern regarding the financial health of property developers. However, do note that losses in the first month was covered by the recovery from second month onwards. Chinese equity funds have generally shown support and sign of recovery in the past one quarter. Overall, emerging market, especially China, has shown better value comparing to the rest of global equity market. Besides China, Malaysia equity market also appeared attractive with relatively better market stability. The industry fund flow offers good insight about our investors' thought process and is a good reflection on what we are doing. Without further ado, let's look into the Q1 fund flow in the industry. Most investors aim for exposure either by means of mixed asset or pure fixed income to lock in the high fixed income yield with anticipation of aggressive rate cut will benefit the fixed income asset. Even for the mixed asset funds investors, preferences are on the global space, which offers investor opportunity to still ride on the potential upside in equity, while in case there is any pullback in the equity market offers a buffer on the downside risk by means of exposure in fixed income. In terms of inflow, the top 3 single country fund includes Singapore, Malaysia, and India. We have seen highest outflow from the absolute return fund, mainly from investors who exit due to disappointing performance for the past 1 year, while seeking for a more focused investment such as exposure in the global technology space. Despite there is outflow from equity funds such as Global, Malaysia, and US, we have seen that these are compensated by inflow into a similar region, just in a different strategy or sectoral themes such as income, dividend, or technology space. As of quarter 1 is the third consecutive quarter of net outflow from the Chinese equity fund. Potentially, this is due to investors seeking for other alternatives based on the China plus one story by investing into other countries such as India. The top 3 key investment themes for quarter 2 2024 are first, the broadening of the equity market rally. While technology remains the key investment theme, especially when it comes to artificial intelligence, fund managers globally are taking view of a further rally to cover the broader market instead of focusing only on the technology sector. Overall, equity market remains bullish for the year. Investors may look into areas which are more fairly valued and able to offer some downside risk protection. Secondly is to invest into investment themes that is related to income. There are increasing inflow into income-related strategies such as REITs, dividend, and income investing strategy which offers attractive yield while continue to enjoy any potential upside in the equity market. Income offers buffer in case of any downside in the equity market while also enjoy appreciation from the potential rate cut. Finally is on the emerging market value and the attractive theme. Overall, the Asia Pacific as an emerging market has shown recovery in the equity space. Malaysia offers attractive entry point and advantage of familiarity bias for our investors. investors are gaining interest into the China plus one story, which includes the like of India and also ASEAN country, where Malaysia also benefit from this. The first one that you can look at is TA Global Absolute Alpha I. We continue to see rally in the global equity space, however, broadening out to other markets. It's beneficial to invest into a strategy that is not constrained by the benchmark strategy, which means the fund mandate allows bottom-up stock picking to invest into best idea irrespective of the geographical allocation. Referring to the fund fact sheet, besides US, TA Global Absolute Alpha I has relatively high exposure in Japan and European market, while India and Korea make it to the top 10 country exposure for this fund. Since inception, the fund has outperformed its benchmark of 8% per annum target return. This fund offers investors the flexibility of reallocating within the global equity market and different sectors to seek for excess return. Second fund you can consider is RHB Sustainable Future Technology. With the strong historical performance of technology sector, it's hard to be totally out of this sector. However, investors may consider a more diversified strategy when it comes to allocating within the different market capitalization of the underlying holding. RHB Sustainable Future Technology Fund's external fund manager is Janice Henderson, who has extensive experience in managing global technology funds. For example, even within the Magnificent 7 stocks, not all are in positive territory for this year. Hence, stock picking is increasingly important to deliver better return over risk ratio for investors. Moving on to the income theme, Manulife Sharia Global REITs remains one of the options for diversification for investors. Due to increasing pressure of interest rate hike for the past 2 years, has put on pressure to many income assets. Hence, with current interest rate pivoting, positioning now for potential rate cut in the second half of the year. As with the rate cut momentum has toned down, the fund is relatively flat for the year. However, this means the opportunity to accumulate for long-term potential growth and income for investors is still available. REITs typically enjoy both benefit of capital gain from equity market and income payout from fixed income. We are launching a new fund, i.e. the RHB Global Equity Premium Income Fund. This fund forms the core holding of our income investing strategy. The fund targets 7 to 9% per annum payout on monthly basis to our investor. The fund aims to achieve the consistent payout from underlying dividend and collecting option premium. At the same time, the fund also benefits from the upside potential of the underlying equity portfolio, which is actively managed by JP Morgan Global Premium Income Investment Team. Finally, investors may take opportunity to relook into our home country fund, with Malaysia offers attractive entry point for its equity market, while our weaker currency appear attractive entry point for foreign investors. With good prospect of current infrastructure projects such as RTS, and announcement of more infrastructure projects such as LRT in Penang, sentiment has improved in the local equity market by the infrastructure project and relatively accommodative monetary policy. Despite AHAM Select Opportunity Fund has not been as attractive as Global Technology Fund, it is still very commendable considering the relatively low volatility with gradual upside in its performance, where the fund has shown a return of close to 15% on the year-to-date basis. The fund annualized return since launch is 11.3%, which offers good opportunity for long-term growth in a more value emerging market space. The fund strategy focuses its investment in Malaysia equity market, however has the flexibility to create excess return in foreign market where opportunity arises. Thank you for joining our podcast today. Investment is dynamic and investors have to constantly review the latest market condition and your investment portfolio holding. I hope my insights have provided valuable information to help you make a more informed investment decision. Please reach out to your relationship manager to explore how this recommendation can be integrated into your diversified portfolio. See you again in the next podcast series.